The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to the webinar. I'm super excited to have you all here with us today. We have a really great industry-specific webinar on finance marketing with our finance expert, Marisol, here today. Super excited to hear what she has to say. We have a ton of great content to cover, and I'm sure that we all will walk away with a ton to learn from. So before we jump in, I want to just cover a few logistics to get us ready for this webinar. So make sure that you are checking your inbox later on for the materials from this webinar. It will be recorded, so you don't have to worry about taking notes or anything like that. The webinar will be recorded and you'll be able to easily access that recording on our YouTube channels, on the Local IQ and WordStream YouTube channels, similar with our other webinars, and you'll also have the materials and recording in your inbox later. And then one thing that I do want to make sure everyone is able to use is the question box feature of this webinar. So be sure to submit your questions throughout. I will be moderating those, and then we have a great Q&A session with our presenter here today, Marisol. So be sure that you submit your questions for those. If you've been to any of our last few webinars, you know we've had some really great Q&A sessions, so I'm excited for that. So for the folks here today joining us on this webinar, welcome. And some of you might be familiar with the Local IQ brand. Some of you might already be working with us. Some of you might be totally new. And some of you might be familiar with our sister brands, WordStream and Reach Local. So for all the folks here today, I want to get us caught up on who Local IQ is. So we are an all-in-one marketing platform that helps businesses find, convert, and keep customers. So we marry proprietary marketing technology along with first-in-class free tools and service to help you have more time to focus on running your business while we help you market your business. And a common question that I often get on these webinars is how you can find out more about Local IQ and our sister brands, WordStream and Reach Local. Definitely follow us on social media. We're on LinkedIn, Twitter, and Facebook. We post a lot about upcoming webinars if you want to attend more similar events, or if you want more information on a lot of the topics that we cover here today, we do share our blog posts on there. And speaking of our blog posts, definitely check out our websites as well. We cover all of the topics that we cover in these webinars in depth on our blog, so definitely check out if you want some more information on the topics that we discussed today. And a little bit about me, your moderator today. My name is Susie. It's wonderful to virtually meet you all. I'm a content marketing specialist over at Local IQ. I originally was working with businesses as a digital marketing consultant over at WordStream. So I took that, expertise of working with real life businesses and coaching them through all things digital marketing and applied it to the educational content I write today for Local IQ and WordStream. A fun fact about me is I'm based in Boston, and this is a super exciting time of year for me. My favorite season is the winter, so I just can't wait for the temperatures to cool down. It's been far too hot, so I'm looking forward to hitting the slopes and enjoying the snow this winter. And with that, I'll hand it off to our wonderful presenter today.
Thank you, Susie. So unlike Susie, I do not like the winter. I am also based in Boston, Massachusetts, and I am more of a summer fall type of person. So although we can agree to disagree on that, we do have a lot of knowledge within the space. So I spent a lot of time really focusing on the financial space and understanding the nuances of how we can make marketing really work to the best of our ability with issues in compliance, understanding data, and really making sure we put the best foot forward in this ever-changing space. And as we all know with finance, it can be something that's a little nuanced and changes a lot. So when I do have free time and I'm not focusing heavily on finance, I do spend time at CrossFit, playing softball, and going on adventures with my dog, Aspen. So feel free to use the chat, ask tons of questions, and we'll try to get everything answered there for you. So on today's agenda, we have a few things that we're going to be looking at. So we have some key attributes consumers want to see within the banking and financial space, understanding generational differences that could impact your business. How are we going to market and reaching Gen Z versus baby boomers? How is that affecting the financial landscape as that keeps changing? And we want to be able to apply all of the great data we found within this study to be able to create a marketing strategy. So we'll go into some different ideations and creative messaging that we can specifically look at. So Let's start with a pop quiz. In the chat, start writing what you've seen as some of the biggest financial marketing challenges. This could be reaching a younger generation, trying to be more digital and online friendly, compliance standards. Have fun in there. Let's see what we can put together.
All right, so everyone type your responses to that pop quiz into the question box. I'm getting a ton of responses right now, Marisol. This is awesome. Ed says he's looking to target a younger audience. I have Julie on, who's looking to target specific products and promote specific products that her bank offers. So looks like there's a lot of folks in here that are struggling with certain specific aspects of their marketing. More like, is it audiences? Is it there's not a certain product that's struggling? I know there's a ton coming in here right now. So it's interesting to see and have people thinking about, you know, what their common challenges are and how we can maybe overcome those.
Perfect. Good. I'm glad that all came up in the chat box because we're really looking to answer all of those questions. So let's kind of understand what audience needs look like. So this is based off a study that we put together. So over 2,000 people responded across the US, and you can see how that broke down within the region. And this was conducted in February of 2022. So very recent, and we can understand the generational trends that we've seen within that because it was so recent. And we see that the different generations responded. We have significant response from those younger generations with millennial and Gen Z, but also a great response rate within baby boomers, Gen X, and the silent generation. So some of the overall key findings that we'll dive into is really understanding how we can help financial institutions grow and reach their different audiences as those change. So one key driver that we've seen, especially due to COVID, is that people are banking online. But yet 2/3 of baby boomers are still banking in person. So we're seeing that individual who's going in to deposit their checks or to speak to their banker like they have for the last 20 years. And that's significantly higher than any other age group. But we found with the younger generations, it is pertinent to make sure that you have online banking and things that are available and easy for those individuals. Now, there is a high satisfaction across the board with financial institutions and banking online and mobile apps across the board. But with the younger consumers, for them to actually stay and not switch banks, they want it to be a better experience. So as we think about that younger generation with Gen Zs and millennials, we really need to make sure it is the best possible thing because those individuals have the capability of switching so easily versus the generations that are a little bit more seasoned. They're so intertwined within their financial space, it's a little bit harder for them to switch. So as we look at that aging audience, we really need to make sure that the younger consumers are happy as part of this banking institution and financial challenges we've seen. And across the board, we found some key challenges uncovered. Now, I won't go into all of these, but a few things that I wanted to specifically highlight are millennials and Gen Zs are most willing to switch. So as we look at these individuals who currently aren't super stuck within one financial institution, how do we get them to switch to our financial institution, whether that's a bank or looking specifically at a financial advisor, for example? And some things that people specifically looked for were low fees and high interest rates because they want to make sure that it's easy to switch their financial institution. And these are things that are really important for them alongside with the online banking experience. Like I said earlier, they do expect more from their online banking. So let's make sure that they have it so they can switch and stay and grow within the financial institution. Another aspect of this is several generations are expecting their services that are not primarily offered by financial institutions. So being different and offering budgeting help, investing help, and debt consolidation are going to be huge, especially if we think about the millennial and Gen Z. They don't know much about the financial space. And about 86% of them follow in their parents' financial footsteps, whether that's good or bad. So as a financial institution, when you're able to provide them this assistance and really educate them, they're going to stick with you for the longevity versus switching comfortably, especially if they're receiving help. So it's always really smart to be able to offer things that aren't traditional, especially in an overcrowded space. Looking at different products or some of those differentiators, these are things that are going to be important. So they choose you over someone else within that space. And we obviously have some solution or ideas that come with the fact that we've looked at things. So I said earlier that we found some challenges. So one is going to be that we're going to be able to promote low cost banking to get switchers. So we want to get those younger generations to come in, specifically when we look at banking, for example. So affordable banks with lower fees, higher interest rates, and other perks and benefits of being a customer. The other aspect is to market your branches. And what I mean by this is to not only look at a brick and mortar location, but also look at the online footprint that you offer. So if you're looking to stick with a brick and mortar and really get people to come into your location, what are some of the differentiators of it? Is it an experience that people want to go into? How's your wait time within the space? Is it difficult to bank in person? But then on the flip side of that, market yourself online and make sure that people understand the online experience is really easy. So it's not just in terms of a traditional checking account or savings account, for example, but really also the investing platform that you have access to, applying for loans online. Do you have to go into a physical location? Do you have to print out a PDF and upload it? All of these things are going to be important to marketing your branches, whether that's online or brick and mortar. The other aspect of things is to really be able to teach financial literacy. So we want to make sure that we're promoting this aspect of things. So like I said earlier, how do we get those younger individuals comfortable with a bank or an investor or wealth management if they don't really have a ton of information about it? If they're following in their parents' financial footsteps, they would go with the same bank or credit union or investor that they've used previously. But how do we get them to stick with you? And financial literacy speaks to a big aspect of that. The other thing that we want to specifically look at is that anyone can save for retirement. So whether that's specifically as a wealth management provider, or if you're a bank or credit union that offers those things, we want to offer them younger to those individuals, educate them on what's available, and tailor programs that are available to them. So we understand that Gen Z and millennials are specifically going to have less in their portfolio, for example, but they're also spending less money on homes and staying at home longer. So are we able to have them start preparing for their future and then have more money in their investment accounts earlier in life? Or also looking at Gen X. And I'll dive more into that in a little bit. We've found a lot of really great research on how we're specifically looking at how those individuals can save. And again, on that same tone, helping customers start retirement. So introduce them to their full retirement program early. Have them understand the different life events that they're going to need to invest into and save for. And the earlier you get them, the longer they're going to stay with you. And this is just a graph of how the study really broke out to understand the decision-making process of each individual. So we understand low-cost customer service are going to be huge, but then also understanding that for some individuals, the location of branches near to work, home, or where they go do things is important, especially if you don't have a heavy online footprint. If they understand that they can do everything online, that location isn't as important. And as we continue through, we're really going to focus on making sure we're hitting the right audience. So we talked about this a little bit, understanding the generational differences that can impact your business. So when we look into the financial space, this is ever changing. We have a bit of a dying audience that's coming into play where all of their money is currently focused. But we really want to get the Gen X, Gen Z, millennial, who is going to be kind of continuing that funnel to understand how they can look at things. Now, there's a significant difference between these age groups. So we understand that Gen Z and millennials, because they're living at home, have a smaller percentage of their budget dedicated to basic living expenses. So they're not spending $2,100 on rent a month. They're more so staying at home longer and saving for a home. So they want to save and invest in larger portions of their life compared to older consumers and what they're able to do. And when we look at things like cryptocurrency or commodities that aren't as well known, they're willing to look into those things and they're confident about their financial and investing knowledge. And they spend a lot of time researching things on non-traditional platforms. So we want to make sure that we're reaching them where they are. Now, as we continue through, we also look at things like Gen X. So Gen X is really kind of that midpoint. They're dedicating a significant portion of their monthly budget to basic living expenses. They have kids in the home. They're specifically looking at purchasing larger homes, continuing to grow. So they're saving less and doing less risk investment. So we want to make sure that they understand that there's safety behind working with investment management companies or with their bank or credit union, and the financial knowledge that they would see in how they can look at their future. And they're currently not optimistic about their financial outlook, which is scary to think about, seeing as they're the next funnel into where retirement looks at. They're going to be retiring within the next 10 to 15 years. So we need to keep that in mind to make sure that they're ready for those things so they don't have to continue working forever. And we understand that there's more confidence with Gen Z and millennials as well as baby boomers in looking at their future. So Gen X is more likely to focus on immediate needs. Gen Z, millennials, and baby boomers are looking more towards the future in their financial assets. And we know working baby boomers are obviously the generation that is investing the most, but we understand that 2/3 of them look at how their financial situation will remain the same or worsen. So only about 80% of them are contributing to a retirement plan. And while that's great, there's still 20% of that market that we're not currently reaching. So we want to see that group and how we're going to reach them differently. And something we have to keep in mind for all these generations is we have to dress for success in different ways. So your Gen Z and millennial, you're going to find more on non-traditional social media platforms. Your Gen X, you're going to find on more traditional sources. And your working baby boomers, although you're going to find them on more traditional things like print, you're also going to find them on things like social media and YouTube as they're kind of continuing to grow out what that looks like. And we want to understand those things and really make sure that we're educating those audiences. So millennial and Gen Z, when you're reaching them on Snapchat and TikTok, you have to dress for success on that platform. Be confident in what you have to offer, be different, be fun, because that's where you're going to be able to educate those individuals. And we'll find out a little bit later that these individuals actually find most of their investing and banking knowledge within those platforms. So if you're not there, they're going to go to a competitor. And like I said, creative is going to play a major role in this. And you want to be fun within social media platforms, especially Snapchat and TikTok, because it's a 6-second clip. You're not going to be able to put crazy rates in there or get people excited about that, but more so the nuances and differences behind your bank, credit union, or investment management company. And we also want to think about life events. So these individuals are getting engaged, they're newly married, they're starting a family, and they're kind of purchasing their first home. So as we want to get them throughout their life events, we want to make sure that we're hitting them in different ways. When you're looking at someone who is recently engaged versus starting a family, they start to view things a little bit differently. So are they invested and ready to start a family, or do they need more help saving within that space? This is how you can get creative and do things that are a little bit different. The other aspect of things is Gen X and Boomer. So they're spending more time on things like Facebook, looking at branded content and targeted display. And we want to be able to offer them clear visuals of financial growth through their creative. So whether that's for Gen X, looking at a home that they had with their 2 children as they're growing to 4 children, looking at the bigger groups that they have to offer within the financial literacy space, and hone in on the key selling points of your financial institution. So don't think about the traditional things like a checking account, a savings account, or things that other financial institutions offer. Think about those differentiators we talked about earlier. Are you educating? Are you tying into those things? And also tie into the fact that these individuals are very focused on their children. So they're parents of teens. How are you going to help them help their children? They're also looking at, specifically on the boomer side of things, moving, downsizing, retiring. So where are you going to be able to hit those life events? And how is that message going to change as you hit them throughout their financial journey? And we'll talk about that more in a little bit to really understand those key aspects that are tying into that and creative that can follow that to make sure you're not only hitting them on the best platforms, but also talking to them in different ways so you can get them to convert fast. Now, when we look at Gen Zs and millennials, they are likely to switch banks. They're likely to work with different individuals more than anyone else. So we want to make sure that we're reaching them in different ways. So about 50 and 47% of Gen Zs and millennials are interested in switching, whereas you only see 11 and 28% with baby boomers and Gen X. Now, that's a huge group that you're able to reach. So when we look at that, we're able to understand how we can get them in with wedge products like checking their savings accounts, or even in investing. How do we get them in wedge pieces to continue to grow out their portfolio? Because if they're likely to switch now, they're also likely to switch again. So we want to focus on not only getting them in the door, but retaining them and upselling them within the product sets that you have. The other thing that we want to look at is they have multiple accounts with the same provider. So I am a millennial. I have 4 different accounts. I'm looking at a home loan, a credit card, a personal loan, as well as other things. And you want to tie into those aspects of getting them to stay within, get the stickiness of those products to make sure that they're willing to stay within your financial institution or within wealth management. Because once they have more products tied within you, they'll stay for the longevity of their account. It's a pain to switch all of those things. So the earlier we can get them, the better. And this is what I talked about a little bit earlier, to understand how to dress for success on different platforms. So Facebook is the #1 source used within millennials as an investment resource. They're educating themselves through finance on Facebook. Now, we think that's crazy when you think about 5 years ago, but you're going on social media, you're educating yourself, you're understanding news sources and different things versus going to a traditional news site or different aspects of things. Gen Z is using YouTube, and 53% of Gen Z is also using TikTok or Snapchat. So we're going onto these platforms and scrolling through and getting financial knowledge. So we look at different aspects. There's a TikToker that I frequently look at. Her name is Tori. She's provided me a lot of that generational knowledge and financial knowledge that I can see within investing and financial institutions. And when I talk to someone who is in one of the other generations, they think it's crazy to look at those for financial advice, but it's quick, easy to digest pieces, and you get comfortable with them. Then you're able to go to your financial institution or ask those questions because you have a baseline knowledge. Now, as a financial institution, if you're able to be that educator, you're going to get them in so much quicker. So we understand that Snapchat, TikTok, Instagram, Facebook, and specifically YouTube are really going to allow us to hit those younger generations in ways that we haven't previously. And you're going to need to dress differently on each of the platforms. So if you're on Facebook, you're going to be a little bit more traditional in terms of what's available. You can still be cool and change things up. But when you look at Snapchat and TikTok, for example, if you dress the way that you did on other social platforms and you do things that aren't kind of against the grain, people aren't going to get excited about them. You have about 2 seconds to get someone's attention, especially with those younger generations. So we want to make sure we're getting them engaged so they can navigate to your website and go to work with you as a financial institution. The other thing we want to specifically look at is Gen X consumers are specifically going to focus on immediate needs rather than investing for their future. So how do we get them to get to the point that they're interested in investing to their future, especially when we look at that generation as being the ones that are going to have the most amount of money in a financial institution or working with wealth management in the near future? And a huge part of that is they don't feel like they have enough money and they don't know where to start. So we want to make sure that we're educating those individuals so that they can get more disposable income to be able to invest, because we understand once you begin investing and learning about how to save for your future, you're able to get more income to continue to do it. Whereas the Gen Z and millennials, they have a lot more disposable income, but they're going to be able to put it into less contributions versus the older generations who are able to kind of tie into larger contribution models. And the way we market this too is going to be very different from different generations. So as we think about completing the funnel and growing it, we need to make sure we're hitting all these generations so that they're comfortable working with a financial institution across the board. And this is going to be my favorite part of the presentation. How do we put it all together and how do we address targeting limitations? So I've talked about a lot of data and information, but I didn't really give you a solution yet. So this really dives into what that looks at. So one aspect of things is really making sure that we're looking at potential switchers. So this specifically is looking at banks and credit unions, but the same types of concepts can be worked across the whole financial space. So awareness is going to be huge. So when someone reaches out to a bank or credit union or any financial institution in general, awareness is going to be a huge part of that. They're going to switch to someone that they've seen all over the place. Now, we think about when we're on social media or we're looking on Google to find something, you're more likely to choose the person that you see everywhere. So that awareness starts building, whether it's word of mouth awareness, seeing a billboard, seeing YouTube, going onto your social media channels and seeing you pop up. That lowers the guard of the individual, and that allows them to be willing to switch to a different financial institution or to even work with an investment management company. The other thing you want to do is continue to look at the different value that you offer. So not just looking at the traditional accounts that you have to bear, but then also the non-traditional things that you're willing to offer, whether that's assisting them in understanding how to get a mortgage or the process they need to take to be ready to get a mortgage in a few years. What investment is available? All of those things are going to compel them to switch and stay with you as one of those sticky consumers. And we can also use different types of research to understand the consumers in your specific area, the consumers that you're specifically trying to reach, and put together framework behind that. So when we're trying to reach Gen Z and millennials, that is very different in terms of how we know that target audience. They're more likely to switch. When we look at a Gen X or a baby boomer, we really need to understand the ways that we look at that a little bit differently. And that ties into creative and different platforms that we're on. And we always want to trigger life events. Now, something to keep in mind is there's a ton of targeting restrictions within the financial space. We run into compliance issues, but then also different issues within Facebook and Google, to name a few. They want to make sure that we're following things like equal housing lender guidelines and putting things out to everyone so that the playing field is level. Now, this is great to be equal, but it makes it really hard to get the right types of consumers in. Now, when we're able to target life events, focus on creative messaging, or hit them on the best platform, when we break them down to individual consumers, we're able to look at this a bit differently. So when we recently married customers, we're specifically looking at them potentially purchasing their first home together. And I'll use mortgage as an example just because it's probably one of the hardest things to do in terms of targeting. Now, we know we need to hit them within a 15-mile radius. We know that there's going to be specific places they're going to move. You're going to see that these individuals tend to move from cities into more suburban areas. So we specifically want to look at those things. We want to see different aspects of what they would be interested in terms of creative messaging. So having that lifestyle of how they used to live in the city, but the ease of transportation back into the city from where they're currently living. So all of those things tie into creative messaging. And we also want to make sure that we're targeting them on the right profile. So we can look at things like their relationship status changing on social media to understand that that would be a good area to start. The other things that we can specifically look at is things like expecting parents. So that new couple that just bought their first home, now they've had a child or two. They need to get to the point where they're interested in purchasing a bigger home. So we look at those nuances and differences as things like nursery planning, what to expect, mom blogs, and the fact that they're spending time on those things to target them with potentially purchasing a new house. And then you also look at other things as well, like parents of teens as they continue to grow, potentially move, presence of children by certain ages allows us to understand and hit them in different ways. And then your traditional movers, we're able to look at things like curated audiences of recent home buyers. Now, I listed off 4 different things. Now, they all have the same goal in mind. They want to purchase their first home or their second home or an additional home for themselves, but we would reach them with 4 different creative messages. We reach them on different platforms with different targeting. The same goal in general, but we need to break them down to individual consumers to be able to make sure that we're hitting the best possible ideation. And that ties into the financial touch points and motivational factors. Now, we look at starting out midlife and mature years as different parts of this. Now, when we look at different opportunities to switch, we see that throughout the case. So that same concept I explained earlier, those life events are really going to tie into how we can get the stickiness of these individuals, reaching them when they're having their first job, or the fact that they're interested in getting married or purchasing a bigger home allows us to track them and target them in different ways that we couldn't through traditional compliance standards, or when specifically looking at the nuances behind what Facebook allows us to do or what Google allows us to do. And although it seems really complicated, when you break it down to the individual and the life events, we're able to make it a lot easier. We can hit those generational differences. We can grow that audience. We just have to be a little bit creative. Focusing on the real life examples that we can learn from. Now, I talked about mortgages a lot so far, and I'll kind of keep that concept, but this can really be used in any sticky product. So we want to connect with the best customers. Now, you'll see this creative that says banking Austin style. So we look at that as someone who was comfortable with living in the city. She's purchasing her first home, and it makes sense that as a first-time mortgage buyer, she still wants to be able to go back to the big city of life, but then also start looking at that suburban lifestyle of things. She just recently got married. She's thinking about starting a family. So she wants both of those sides of things, but it's a fun and creative message that we're able to tie into that. But then at the same time, we also want to think about being a little bit exciting or new or different with our creative messaging. When we're looking at an overcrowded space, if everything looks the same, we're not likely to get people to convert. So it depends on how you want to act. So we look at Cash Express on this side. They're doing something that's kind of new and different and exciting to get people to take a second to actually look at the creative, to get excited about it. And even if it doesn't make sense to them right now, it's a funny thing to look at that will make them talk. They'll send that creative to one of their friends, and maybe it's that thing that gets them excited. And we also look at all of those things to tie into things. So looks at different financial needs. So whether it's buying a new home, remodeling, buying a car, there's needs that are yet unknown. We want to understand that the financial partner is there for all of that. That goes back to the financial literacy aspect of things, that goes to hitting all of the generations differently. And instead of thinking, it allows us to make sure that we're hitting the right audience at the right time in their life. So thinking about the product, think about that. That we're able to tie into. Be a little bit different with your creative messaging, whether that's looking at something that's fun and entertaining or something that's going to make people think. Banking can be a little boring. We all know it. Financial institutions in general aren't known for being, but if we're able to change that concept, more people are going to be willing to work with you and get excited. So we want to make sure that we're hitting fun and different messaging, especially if we're on things like Snapchat. So that way you can really get the marketing to work for you versus putting something out and hoping that it sticks, especially within the financial space, since there is so many parameters around what we can and can't do. Not only research on the front end of things, but always making sure that creative is data driven, and then also making sure that everything works is going to be key. And I wanted to put out a few thought starters here, and feel free to put things in the chat for this as well. But we want to make sure that we're hitting different challenges that we've identified and thought starters that we can look at specifically. So we want to be able to look at and promote low cost banking to get people to switch. Remember, your Gen Zs, your millennials who have the capability of switching very easily. What are you offering for those things? Market your branches, whether that's a brick and mortar location and you're offering ease of the location, things that are there specifically to offer. Capital One did something very exciting and interesting with that by having the Capital One cafes, and then offering discounts on coffee specifically for those who have a Capital One card. And that's something that's going to get people to not only come into your branch, but then get people who wouldn't traditionally come into your branches to go in and get the coffee and potentially switch. I've been in a Capital One cafe before just to get coffee because they have a type of coffee that I like. I then went and got a Capital One card because I went into the location and found out that I can get 50% off my coffee. So opening a bank account with them was a simple switch for me. The other thing that we want to continue is to teach financial literacy. Again, we've talked about this through the presentation, but educate your audiences so that they're more likely to stick with you. When they're lost navigating through the financial landscape, if you're there to lend a hand, they're more likely to be excited about the things that you have to offer. So we want to educate them and make sure that they feel comfortable throughout their financial journey. When you get someone who's a Gen Z or millennial, teaching them about mortgages that they're there to offer, what retirement planning can look like, what investments look like, and understanding how that all ties in together. And have them understand that anyone can save, whether it's $5 a day or $200 a day. We want to show them that any little piece of that is something fun, like saving a computer that you want to buy. All of these things are going to be identified throughout that, and things that people specifically wanted to look at. And we understand how this all ties together to make sure that we're hitting the best audience. And I'm sure that a lot of questions will come out of this, how we get it to work, how we know where to start. Start these things. It can be confusing as to where to start, and we can really let.
Thank you so much, Marisol. So this in the question potentially want more on that. Regulations. Every single different finance institution has a ton of internal as well as external regulations and restrictions that limit their targeting, their marketing to those wonderful audiences that you spoke about. So And could you just give me a few examples of, how to maybe combat that, maybe any times that you've dealt with that with folks and I have regarding that?
Sure. And I think a big aspect is compliance is difficult to navigate. So I would first have a sit down with your compliance team and really understand what are going to be some of the challenges that you're going to face. So before you even think about marketing copy or specific platforms, is there certain things that they are hard against? I've worked with a few compliance teams that specifically would not let us even go on certain different websites. Like they didn't want to have their ads shown on Facebook because of things that had happened in the past, or they specifically had creative messaging having to show a certain type of individual or multiple types of individuals. So get ahead of that ahead of time so that we can understand where we can start with a baseline. The other thing that we have to keep in mind with compliance is sometimes even on products that don't have specific guidelines that we have to follow, like a checking or savings account, they'll still want us to broad target everyone. So just like I said with mortgages, that can be a little bit difficult in terms of what Facebook allows for. Think about those audiences that we're specifically looking at. How do we reach a business owner versus how do we reach someone who's interested in a checking or savings account? Just off the bat, a checking or savings account tends to be millennial or Gen Z to begin with. So when we look at that, we can the fact that a bank or a credit union, for example, might have that you can get your money 2 days earlier than your check is actually deposited. So those types of things are going to be important messages for those individuals. And talking this out and sitting at a table with whether it's a marketing professional or other aspects of things is really going to allow you to start making those differentiators and A/B test everything. Something I've found with compliance is when we're able to show them that things are working to the best of our ability, but we're not hitting certain individuals or kind of segregating that, they get really excited about it. And
Great answer, Marisol. With that, we have specific, but I think on running a loan promotion for institutions, best bet when it comes to targeting on Facebook.
General is very difficult because they have nuances that we specifically can't hit. So when you're running into things like types of credit or specific aspects of that, focus more so on the life events that are offered within that. So if there are certain types of people that you're trying to reach within loans, instead of thinking about the credit specifically or the household income or things that we can't potentially reach, look at the fact that we're targeting things like people who are recently engaged or movers or different life events within that. And also, again, going back to creative messaging, when we can't target things super that are kind of on the more niche side or things that need to be hyper-focused, how are we able to do that a little bit differently? So focus on the creative messaging behind it. Think about ways that we're going to reach those individuals that isn't just checking off a box like they have good credit or a high household income, and think about those as individual consumers. And that would be the easiest way to target in those ways. The other thing is, if Facebook isn't working specifically for you and your business, look at other platforms. Is it easier to start with things like YouTube or something that you haven't traditionally tried? Test different platforms, A/B test different creatives to make sure that you're able to do things. And if a platform isn't working, even though it's something that traditionally might have worked for someone else, try something else. Be willing to be a little outside of the box with things that you're looking at.
I love that, Marisol. I am a big believer in not focusing on what you can't do, what you cannot do, focus more on what you possibly could do and the other possibilities out there, the other options, the other workarounds, the other platforms. Those were all great examples. Life event targeting as well, interest-based targeting like that can definitely be helpful too. So solid answer there, Marisol. Thank you for that. Switching gears a little bit, this is another interesting question from one of our guests, Norma here. She asked, something that I am curious to hear your thoughts on. So we've talked a lot about in this webinar, targeting to the average consumer, to individuals, offering baking and investing for maybe younger individuals or older individuals. But what would you say to those financial institutions that are maybe more B2B, maybe those folks that are trying to market to potential clients like municipalities or other businesses, local governments, authorities? Would the strategies possibly change? Do you have any potential insight onto that type of B2B financial marketing?
Of course, and B2B is something in general that's very hard to target, but we again have to think about that individual as a consumer. How are they as a small business owner? What are they more likely to be? And then also the platforms that they're more likely to be on. So instead of looking at some of the more traditional platforms, think about LinkedIn, think about Facebook in terms of being able to reach certain types of job titles, and market to them in the way that they understand. People are more likely to convert as small business owners on Facebook from what I've seen with campaigns that I've run within the financial space, because they're not specifically looking for something. They're at home after a long day at work and their guard is down. So they start seeing those ad copies within that. Also, specifically looking at things like email, reaching them in their inbox, but then also creating different aspects of things. So you're hitting them via their inbox, but then also using things like addressable geofencing on things like connected TV and display. So using those same types of people that you're trying to reach and hitting them multiple times, because in a lot of standpoints, you can't hit them the same way that you can hit traditional B2C consumers. So thinking outside of the box with that, and also be willing to put in a lot of effort towards that. Dress for success differently on LinkedIn than you would on Facebook. So when you're on LinkedIn, you're more likely to reach white collar professionals, whereas on Facebook, you're going to be able to reach a mix of both. So you want to reach them in different ways, but always break them down to who they are as an individual versus thinking about them as a business owner or just specifically focusing on B2B.
Wonderful. That's a really solid answer, Marisol. Thank you for that. I definitely agree. And that's something I've always joked about just in the general world of B2B marketing is, let's say, I'm a finance decision maker for, a local municipality or whatever it may be. I'm not necessarily looking at financial related materials online all day. I'm planning what I'm going to have for dinner later. I'm looking at the weather for the weekend, so thinking of those out of box placements, like you had said, Marisol, I definitely is an interesting take on it. And definitely, depending on the placements, whether it be, like you said, LinkedIn versus another platform, obviously that, that copy, that content is going to look a little different. Awesome. So I have another question coming in here from Jasmine. What would you say to the financial institutions out there that have maybe a specific goal in mind, very, very specific here? Jasmine was saying she's looking to increase new memberships, which I'm sure is a common goal for many banks out there. Let's say I'm totally new, don't know where to start when it comes to my online advertising, but I know for sure I need to push new memberships. How would you start to go about that?
Sure. So when we look at new memberships, and I assume you work with a credit union, Jasmine, you're specifically looking at those wedge products that people are looking into. Now, I'll be honest with you. Proving ROI with checking and savings accounts is a lot harder than it is with a mortgage, because we don't exactly know the nuances behind that. We know we can drive people to your website. We know that we can get those things, but the amount of money that someone will put into a checking account could range from 25 to 20,000 or even higher than that. So when we're able to get in new members, the ticket value tied to each member could be a little bit different. But we want to think about traditional platforms for them. The fact that they're actively searching for checking or savings accounts on Google, we have to keep in mind that the cost per acquisition on that might be a little higher. There's a lot of competition in the market for checking and savings accounts. Focus more heavily on things like Facebook, YouTube, driving awareness within those spaces. And then also keep focus on the key differentiators that you offer. So if you're specifically offering things like get paid 2 days earlier, if you're offering an incentive like $600 if you open a checking or savings account, you're more likely to get better conversion rates in a market that is so dense. So be willing to do something that is a little more focused on a message and things that people will get to offer to actually get them to actively switch or to even open their first checking or savings account, especially when you're looking at those younger audiences.
Awesome. Thank you, Marisol, for that. That was super interesting. And I love how you always keep coming back to kind of thinking about how you would predict the conversion rates for certain strategies. I think that's great to be thinking, all right, well, realistically, how would somebody potentially convert off of, this strategy versus another? So really great insights there. We're going to wrap up with maybe one last question here. I wish we could get to all of your questions today. This is amazing. As you can probably tell, Marisol could talk about finance marketing all day, all night. She lives and breathes it. So this is really, really great. But sadly, we're coming up to time. So I want to wrap up with one last question here. And I think this is a good wrap-up question because it's probably on the mind of a lot of folks. And this is coming from a few different folks on the line now, but a few of you, many of you were asking, maybe your finance institution, your bank, whatever, your credit union, whatever it may be, is kind of new to online advertising and marketing. Maybe you're just more of a brick and mortar location and you have, mainly that focus of foot traffic and that brick and mortar location focus. How can you switch to a purely online focus? What would be the best strategy to kind of get started with online marketing as a financial institution?
Sure. I think a few things you have to keep in mind. So when we're looking at being completely online versus brick and mortar focused, you're going to lose a certain audience that you may have reached previously. So you're going to get more Gen Z and millennials or people who are willing to have an online, etc. But you might lose the people who want to go into a traditional brick and mortar. So if you're okay with losing that, then that's a good place to start. The other thing that you need to keep in mind is because you're going to be reaching that younger generation, you want to be exciting on different platforms. You're going to have to completely throw out the traditional box of being comfortable within creative that looks similar to everyone else. So get exciting, change it up, be willing to go on non-traditional platforms like Snapchat and TikTok. Get people excited about the fact that it's so much easier to do everything online. And that's going to be a big challenge at the beginning, and it's not going to show the biggest conversions to start with because they're going to need awareness of the fact that everything is online. But that's the future of banking. We're getting to the point where 90% of consumers are online and doing all of their mobile banking versus going into a traditional brick and mortar. And as those generations keep switching, you want to be ahead of the curve. And for those who are willing to do that, be different, be fun, and be willing to be outside of the box and A/B testing.
Be different, be fun. I love that. I mean, it's definitely, people think marketing is this boring, ongoing challenge, but if you have that outlook on it and be ready and flexible for those changes with the involvement onto the online platforms, I definitely can agree, Marisol, you'll be set up for success. So that was a really great answer. Marisol, I can't thank you enough for all of your insights today. This was awesome. Thank you everyone on the line for joining. Be sure to keep your eye out for our other webinars. We do them monthly, sometimes more, twice monthly. So definitely keep your eye out. Check out our blogs for more information on finance marketing and marketing in general. And I hope you all have a wonderful day. Thank you, everyone.